On February 24, 2025, the crypto world held its breath. Former President Donald Trump, known for his market-moving pronouncements, took aim at cryptocurrencies. His verdict? A scam and a disaster. Trump's words, delivered with his signature bluntness, sent shockwaves through the market. It was a stark reminder of the power of his words, even outside the Oval Office. Adding fuel to the fire, Trump hinted at the possibility of stricter U.S. government regulations on cryptocurrencies. This sent a chill down the spines of investors, many of whom still remembered the market impact of his previous pronouncements in 2021 and 2023. Traders braced themselves for impact. The question on everyone's mind was, how deep would the fall be? The crypto market, known for its volatility, reacted swiftly and brutally. Bitcoin, the flagship cryptocurrency, plunged 15%, briefly dipping below the $89,000 mark. Ethereum, the second-largest cryptocurrency, wasn't spared either, tumbling 10.5% to trade at $2,388. Altcoins, the smaller cryptocurrencies, felt the heat even more intensely. Dogecoin, often associated with Elon Musk and speculative trading, plummeted by a staggering 20%. XRP, the cryptocurrency used by Ripple, witnessed an 18% drop. Solana, a rising star in the DeFi space, wasn't immune either, shedding 13% of its value to trade at $137.87. The total market capitalization of the cryptocurrency market took a $300 billion hit. As if Trump's comments weren't enough, the crypto market was already grappling with the aftermath of a major security breach. On February 21, 2025, Bybit, a prominent cryptocurrency exchange, suffered a devastating hack. The attackers made off with a staggering $1.5 billion worth of Ethereum. This event, dubbed the biggest digital heist ever, sent shockwaves through the industry. It raised serious questions about the security of cryptocurrency platforms. The hack exacerbated the market downturn, amplifying the fear and panic triggered by Trump's statements. Ethereum, already reeling from the overall market slump, took another hit, plunging over 15%. Solana and XRP also experienced further losses as investors grappled with the implications of the Bybit breach. The incident served as a stark reminder of the risks inherent in the unregulated world of cryptocurrencies. The irony of Trump's anti-crypto stance wasn't lost on market observers. Bitcoin's all-time high had coincided with Trump's inauguration in 2017. Back then, there was hope in some circles that he might be the Bitcoin president. After all, he had surrounded himself with figures sympathetic to cryptocurrencies. However, those hopes were quickly dashed. Trump's presidency came and went without any significant pro-crypto policies. One of the most notable broken promises was the proposed Bitcoin Strategic Reserve. This initiative, touted by some of Trump's advisors, was intended to secure a significant portion of Bitcoin for the U.S. government. However, the plan never materialized, leaving many investors feeling disillusioned. Trump's lack of action on the crypto front contributed to the growing negative sentiment surrounding the market. Section 5. Fear and Greed. Sentiment plummets. Trump's comments and the Bybit hack had a chilling effect on market sentiment. The Crypto Fear and Greed Index, a widely followed barometer of investor sentiment, plummeted to 25, firmly in extreme fear territory. This indicated that investors were extremely risk-averse, expecting further losses in the market. The index reflected the prevailing uncertainty and fear gripping the crypto world. The negative sentiment was further fueled by broader economic factors. The U.S. stock market, already struggling, was showing signs of further weakness. Investors, worried about a potential recession, were pulling out of riskier assets like cryptocurrencies. The combination of negative news, economic uncertainty, and Trump's pronouncements had created a perfect storm for a crypto crash. Section 6. Bitcoin safe haven or high-risk gamble. The recent market crash reignited the debate about Bitcoin's role in a portfolio. Some proponents had touted Bitcoin as a digital gold, a safe haven asset that could hedge against inflation and economic turmoil. However, the recent price action suggested otherwise. Bitcoin, instead of holding its value during a market downturn, had tumbled alongside other risk assets. This led some analysts to question whether Bitcoin was a safe haven after all. They argued that it was still a highly speculative asset, driven more by hype and speculation than by fundamental value. The lack of regulatory clarity and the inherent volatility of the crypto market made it a risky proposition for most investors. The events of February 2025 served as a stark reminder that Bitcoin, despite its popularity, was far from a risk-free investment. Section 7. To buy or not to buy, the great crypto debate. Despite the market crash and the prevailing fear, some prominent figures saw an opportunity. Eric Trump, son of the former president, took to Twitter to advise his followers to buy the dips. His tweet, while lacking the market-moving power of his father's words, nevertheless sparked debate within the crypto community. Michael Saylor, CEO of MicroStrategy and a well-known Bitcoin bull, also hinted at buying more Bitcoin. He called the price drop of Bitcoin on sale, suggesting that it was an opportune time to accumulate more of the digital asset. Saylor, whose company held a significant amount of Bitcoin on its balance sheet, remained bullish on the long-term prospects of the cryptocurrency. Section 8. The looming shadow of regulation. The market turmoil and the Bybit hack brought the issue of crypto regulation back into the spotlight. Governments around the world had been grappling with how to regulate the decentralized and often anonymous world of cryptocurrencies. The lack of clear regulations had created an environment ripe for scams, hacks, and market manipulation. Trump's comments about stricter regulations added to the uncertainty. While he didn't provide specifics, his words were a reminder that the regulatory landscape for cryptocurrencies was far from settled. The industry, once accustomed to operating in a relatively unregulated environment, was bracing itself for increased scrutiny. The question was not if, but when and how regulations would be implemented. Section 9. Navigating the crypto storm. What's next? The crypto market, battered by Trump's comments, the Bybit hack, and broader economic fears, was left licking its wounds. The road ahead looked uncertain, with the possibility of further volatility and regulatory headwinds. However, the crypto industry had weathered storms before. Each crash had been followed by a period of recovery and innovation. Whether this time would be different remained to be seen. The market was watching closely for signs of stabilization, for clues about the future direction of regulations, and for the next catalyst that would shape the crypto landscape. One thing was certain: the world of cryptocurrencies, never short of drama, would continue to be a source of fascination, speculation, and debate.